Today I'm going to share a real experience from one of my recent sellers of how we review and make the selection process from multiple offers. By the way, you buyers can listen in because you'll get to hear the seller's most important criteria. And obviously, even though I'll be using a real example, I'm not going to disclose the actual prices of the offers, but I will use the same dollar differences with the average sales price here in Austin. So to start off, we listed their house at $575, and within 3 days, we accepted a contract. We received 7 offers, which I'm going to break down and review them with you. So again, our list was $575. We received 1 offer in at $575, and we received another offer in at $590. We received 3 offers in at $600. Another offer at $625 and one at $640. Naturally, you probably think this was an easy decision because of the price difference. Well, there's just so much more that goes behind choosing the best offer. And the best offer is the one that's going to actually close and not have us bounce back on the market like we see so often. So stick around if you're wondering, how do sellers determine the winning offer? Or if you're a buyer, be sure to stay to the end or save this video because I'm going to be sharing my best buyer tip when you're competing in multiple offers. So let's jump back a little bit. After staging the house and having some fabulous professional pictures done, preparing a marketing package, we had everything done to set the stage. By the way, my sellers did choose to cut off their showing after 1 day, which is why we're only talking about 7 offers instead of 10 or 15 offers here. By the way, if you're new to the channel, take a moment to like and subscribe to my YouTube channel, and please jump into the comments if you've actually had any experience in making an offer and not being accepted, or if you've been a seller and accepted an offer, what was the reason? So there's different ways that you can handle multiple offers. Some agents are going to edit the MLS listing with a deadline and request all the offers to come in with their best and final. Or in other words, the buyers should submit their highest bid along with the best terms that they can possibly offer. So then the agent is going to present to the seller, and the seller is going to accept one of those offers. Or some agents will continue to negotiate with one or more of the strongest offers and exclude the lower offers. And many times agents and sellers might just jump with the highest offer and not even evaluate, which is something that increases all the back on the market listings that we see. So today I'm going to talk about the process that a skillful realtor will use when they walk their clients through this. I personally like to use a spreadsheet that just has an easy side-by-side comparison. We look at all the different components, and I'm going to sort the criteria with what is most important to my seller. And this is largely what is going to be compared after or in addition to the price even. So my seller's concerns that I'll keep forefront in my mind might be concerns like apprehension that the home will not appraise, or apprehension of things that are going to be uncovered in an inspection, or maybe my seller just needs time to find and close on a new house before moving out. Since we have the benefit of being able to leverage the multiple offers to achieve things that are the most important, I'm going to just take them step by step. And buyers, if you're watching, take note, because many times with just a few variables, these are consistent with the needs of sellers that you're going to want to position your offer towards. So check this out. These are factors or red flags that we will look out for. Number 1, let's discuss the type of financing. Typically after the price, this is going to be one of the larger considerations. We do realize that some buyers are not going to have an option other than the FHA or VA or USDA loans that they're approved for. But as a listing agent, we are representing our seller and their best interests. And those types of loans don't stand up very well because they're backed by the government and they just require lots more hoops to jump through. For example, my listing received an offer of $530,000, which is $55,000 over list, but it was with an FHA loan. So listen closely. The third-party financing addendum, it states that the buyer shall not be obligated to complete the purchase of the property or even forfeit the earnest money if the appraised value is less than the contract price. So obviously, if I and my seller didn't know exactly what was going on with the market or have valid comps for $530, which is unlikely, we would have listed at $475, we probably would need to throw this offer out of the mix unless the buyer agent had, confirmed that the buyer had funds available to cover the difference between value and appraised value and was willing to sign the FHA amendatory clause. And this is diving really deep into the legal aspect, and it needs a written statement by the Federal Housing Commissioner or a direct endorsement lender, and that just sets the appraised value of blank amount. So hopefully I haven't lost you guys, but for simplicity, let's just say the house appraises at $515. Well, would the buyer be able to come up with the additional $25,000 to close on this contract? Well, not likely, or they probably would have put more than the minimum amount of cash down. And some of you might be thinking, well, that's why we offer an appraisal waiver. Well, not so fast. The appraisal waiver doesn't do jack with an FHA loan because, like I just showed you, if the appraisal does not come back for the contract price, now this is not the loan price, the contract price, the buyer is not even obligated. So let's just set this offer aside for some more consideration. Number 2, let's take the next one. With an appraisal waiver, that one states that it's the option 1, which basically means they don't care what the appraisal is. The buyer is waiving it. Okay, we're looking good. So let's look further. Number 3, does it offer my sellers their desired closing time frame and a lease back so they can get into a new home? Yes. Okay. Number 4. Now, what about my 3 offers with one being cash that came in at $600? Obviously, we know that cash is attractive, but this cash buyer is asking for a 5-day option period. I mean, what the heck? Who needs a week to get an inspection done? If you're a buyer out there, you should not even ask for this. In my opinion, it's really unnecessary, unless there's just huge concerns or maybe it involves more than a standard inspection. Maybe you need a septic inspection or a foundation inspection where the contracts are not immediately available like a typical inspector is. But that's pretty much about the only reason why you should request this amount of time. And to look further at this cash offer, there's only $500 in option money. Well, in a multiple offer situation, to me, this just indicates that there's low desire. When you're looking at hundreds of thousands of dollars, $500 is not much skin in the game. And the potential buyer can easily walk away from that, right? So on another deposit note, some people think that earnest money is important, but not really, because the earnest money gets returned to them at closing unless they default on the contract and they don't use one of the several different ways to opt out. Number 5. Now, 2 of these $600,000 contracts were asking for 28 to 29 days on a finance approving. I mean, what? Again, this is so crazy. Especially when lenders will give a buyer a conditional approval if they have submitted all of their documents and they're ready to go. Buyers, be so sure that you're strong in this portion of your offer. If you're ready and the lender gives you a go-ahead, waive that finance contingency. Be aware that when I'm acting as a listing agent, I'm thinking of my sellers first, and there's just really no need for them to be on pins and needles and wait 28, 29 days until they can be assured that the sale is moving forward. Number 6, let's look at the owner title policy. So since this policy costs approximately half of 1% of the sales price, it's actually a decent negotiation to consider. If the buyer really wants to look strong in an offer, they should be willing to pay this. Now, the survey, I don't think it's such a big deal because it's usually under, $500. Now, the HOA fees, let's take another look at, especially agents try to hide seller charges or buyer caps on what they're willing to pay. And this is in small print, way down. The point here is, why do we fight for $150 here or there to make a contract more convoluted? We just want to look at a clean contract. Number 7, errors on the contract. And it was crazy because just in these last 7, there was 3 errors on the contracts reviewed. One of them stated that they were going to be 100% cash offering. But then when I turned to look to the finance addendum, it has a 3.5% down. Oh my gosh. Okay, and then another one is saying 0 option money, but they're asking for 5 days of an option period. You have to pay for something to get something. So totally invalidating the contract. Agents that don't make errors, but maybe just delay in responding, can also be a red alert. It could indicate that it might be a difficult process or maybe delayed closing at best. Earlier I said, stick around and I'll give you my best buyer tip. Here it is. Don't be afraid of a backup offer. This is one of the best ways to win a contract, because if the seller didn't choose a strong offer but only went with the highest, many times it's likely to have fallen through. And if you're in that backup position, now you automatically move into number 1 position and are under contract. Versus, if you just walked away and then you see it listed again in a week or two, the sellers will probably have raised the price because they know what people are bidding. And now you're going to have to walk through all of that time and effort again. Just do yourself a favor, put in an offer as a backup, and do this a couple times and you'll get the home. So in wrapping, we've covered financing, appraisal waiver, and the validity of it, closing timeframes and leaseback, option money, time requested and amount offered, earnest deposit, financing, approval, contingency, and it just goes on and on. The takeaway here is that you want an excellent realtor representing you, whether you are the seller determining which offer to accept, or if you're a buyer and you want to make that winning offer. Please don't forget to give me a thumbs up and be sure to subscribe to my YouTube channel so you stay in the know and up to date on Austin real estate. And if there's any way I can help with your specific needs, please reach out. My name is Susanna Gentry, and this is Tuesday's Tips from your Austin, Texas Realtor. See you next week.